What's up, guys? So in today's video, I'm actually going to be going over the strategy that has helped me secure multiple funded accounts. I actually just ended up passing another 150K challenge account this Friday using this exact strategy. And I have passed plenty other prop firm challenges in the past. I've even used this same exact strategy on my live accounts, and it's proven to me time and time again how profitable of a strategy it is. And the most important thing, it is a very simple strategy. It's mainly just two things that we're going to be going over today, and that is previous session highs and lows and supply and demand. Those are the only two things I use when it comes to this strategy. I see a lot of beginner traders, they overcomplicate it. They're talking about all this crazy stuff, or they're just having too complicated of a strategy. They're getting themselves confused. And at the end of the day, trading does not have to be that complicated. Like I said, I only use two things: session highs and lows, supply and demand. And that has helped me secure multiple funded accounts, receive payouts. And like I said, I even use this strategy on my own personal live account. So let's just go ahead and I'm gonna start breaking it down for you guys. And right when you add that to your charts, you're gonna see these sessions pop up. If you wanted to, you can come up here, you can go ahead and change like the style. If you wanted the box, high lows marked out, background, dotted dash, if you wanted to change the color, all that stuff. You can even change how many sessions you want to pop up here. I usually only do between 3 and 5, but just for this, since I'm going to show you guys some examples, I do have it set to 10. But that is totally up to you. So I do this every morning. I mark out my session highs and lows. That's one of the first things I do. And I'm gonna just go ahead and mark it out with you guys right here. So this is Friday's session. Now, before I start marking the session highs and lows out, what I'm gonna mention is the way you find session high and low is the highest point between London and New York session and the lowest point between London and New York session. So you can see right here, our highest point is actually this part right here. You can see we created the highest point late in the day. So I'm just gonna go ahead and mark the session high out right here just to show you guys we have session high. But for the purpose of the video, I'm gonna show you this real quick. Let's go drag this right over to here, since this was our first session high, and I wanna show you guys this. Now notice how we have the session high right here. We came all the way down here, bounced up, came all the way back up to that session high. We tapped right into that level and actually rejected off of that. That is a prime example of a session high being respected right there. You can see we came all the way back up to test that session high, and the market is telling us it does not want to continue higher. That's why we had a rejection off that session high. Now let's go ahead and mark the session low right here. So going into Monday's session, what we're going to be looking out for if we do not go higher is a tap into this level down here at that session low. Now, to have the best probability of a session high or a session low rejecting, you want a level of supply and demand in confluence with that. Now, we'll talk about supply and demand a little more later in the video. I do want to just stick with these session highs and lows right now, give you a few examples, then we'll talk about that. What we're going to be looking for is a tap into one of these levels and possibly a break. If we tap into this session high, that is confirmation that we're just continuing to go bullish. And if we break past this session low, that is confirmation that we're wanting to go bearish. But we can always tap into these levels and fully respect them, just like we did here, and like some other examples I'm going to show you where we just tap right into it and get the rejection that we're looking for. Now, we've seen how this level right here was respected. We came, tapped right into it, and then we got that drop down. Let's go ahead and take a look at this session low. We're just going to delete this for now. We're going to go all the way to the previous session. So notice how we have the lowest point between London and New York, like I mentioned. We're going to go ahead and mark this with session low, and let's follow it over. Boom, right here. Notice how we tapped right into that session low perfectly. Now, we did wick past it a little, which is completely fine. Sometimes you are going to get a little wick past it, but notice how we closed above that session low and we got some momentum right off that session low. We tapped right into it, market started reversing, and that's what gave us that push all the way up into this session high level. So you could see if you would have had this session low marked out from Thursday, when you came into the market on Friday at 11:30, you would have tapped into this level and you would have seen that we had that rejection right there. There could have been a supply and demand in confluence with that level as well. So you would have been looking for longs for the most part, since we got a clean rejection off this level. Now, since we talked about this session low, let's go ahead and jump all the way up to the session high up here. Now, if we do break past this session high, that's going to be a target up there that we're looking to tap into. I'm going to want to see, once we start pushing closer to that session high, what type of level of supply and demand is in confluence with that level, and really what price action's doing. Now, I'm going to go ahead and give you another example in the market where session high and low was respected. So let's just go ahead and jump to here, Tuesday the 17th. Now, just to let you guys know, it is more accurate to mark these out on the M5 time frame. Sometimes I'll mark them out on the M15 without realizing, and I'll go back and just make it more accurate on the M5. Let me go ahead and change this to a session high. So you can see we have a session high right here. That is the highest point between London and New York. Now let's follow it over. Boom, right here. Notice how we tapped into that level. Now we did go a little above it right here again, but notice how we did not really leave the range of this session high. We did not break past it like crazy like we did over here. You can see we just kept going up and up and up, but we did go and tap into this level again and got a rejection lower. You can see on the M15, it's looking a lot cleaner. We just tapped into it and then got that rejection lower. That is a prime example of us respecting that level right there. Now let's go ahead and go to the session low on the same day. So you can see right here, this is that lowest point between London and New York. Let's go ahead, change this to a session low, and you could just scroll over and see what happened. So we didn't tap into this level right here. We did get that push up all the way into that session high, but notice this right here. We tapped right into the session low, created some wicks, and then got that push all the way back into that level, which actually brought us to push past that session high right there. But you can see this session low right here was respected very, very well. We did not break past it much at all. We actually rejected it very cleanly and closed above it. So those were just a few examples of how accurate session highs, session lows can be, what you can notice from them, stuff like that. Now we're going to go ahead and talk about the main part of the strategy, which is supply and demand. Now, when it comes to finding supply and demand, what you're going to want to be doing is looking for the previous contract candle to the push down. So let me go ahead and just show you an example. Right here on the H1 time frame, you can see we have this previous blue candle right here. Then we have the downtrend right there. So this would be your previous contrary candle to the downwards move. So what you would go ahead and do is go to the wick, the very bottom of the candle. You would go ahead and put H1 since you're on the H1 time frame, and this would be an H1 supply. Now I have all my time frames on a template. You can see H1, M1, M15. I have all of it. It makes it a lot easier. I highly recommend you do the same. Now with my strategy, the way I use supply and demand, I like multiple time frames being in confluence. That's a big thing for me. I really like 3 time frames in confluence with each other, 3 or more. But if I do have 2 time frames, I tend to take the trade sometimes. I just know the risk is a little higher, and I'm definitely cautious, and I like to read price action, see how it is right around that level. But what do I mean by multiple time frames in confluence? So for an example, let's say we have an H1 right here, and let's just pretend that we had like an M15 right here, and just say we had like an M5 right here. Now, I will give you guys an example later on in the video. I'm just doing this for right now. So you could see we would have 3 time frames, right? The H1, the M15, the M5. When you have multiple time frames in confluence like that before your stop loss would be hit, what it's doing is it's giving you a higher probability for the market to reverse and then go your way to your take profits, right? So for an example, let's say that we were going up to our level, right? And we tap into this H1. Now the market does not want to respect that H1. We're pushing past it. Now we're going into this M15. Let's say we even push past the M15. We go to this M5. Then we finally get that rejection down. And then it goes to all our take profits, right? So the H1 didn't get respected, the M15 didn't get respected, but the M5 got respected, and that's what gave us our push down. That gave us not 1, 2, but 3 opportunities for the market to reverse, and that M5 is what did it for us. So kind of just think of it, every level of supply that you have within your stop loss is just another opportunity for the market to reverse and go to your take profits. Trading is a probability game. You want the highest probability, and this is a strategy that has given me the highest probability. So for an example, when you have 3 time frames like this, if the first and second one do not get respected, but the third does and it goes to your take profit, boom, that's good. Now let's go a little higher. Delete these real quick. Just say this is M1. Now let's say we're going up to the level. We tap into this level, and now we don't respect and we just push through, and we have no other levels of, let's say, supply in this case. We have no other levels of supply. Boom, we're just going to push past it, go straight to our stop loss, and that's that. We do not have no other levels of supply in there that gives us that opportunity for the market to reverse and go to our take profits. Once we push past that, there's nothing stopping price, and it's just going to go to our stop loss. So that is why I like multiple levels of supply and demand before my stop loss, so I can have all that opportunity for the market to reverse and go my way. Notice how this M15 previous contrary candle is up here near that session high. What we're going to want to do is go ahead and mark that out. Remember, like I said, starting at the bottom of the candle, you want it to be as accurate as you can. Let's go ahead and drop to the M5. And you can see right here that previous contrary candle to the push down. We're going to go ahead and we're going to mark that as well on the M5 time frame. So you can see those are two time frames right there. We have an M15 and we have an M5, and we also have a session high right there. So if we had those two levels of supply and we have that session high within our stop loss, that's given us three opportunities for the market to reverse and go our way. So we can either respect right off the M15, we can break past it a little, go to the M5 and then get our move down, or we could break past it, go to the session high, and then possibly get our move down. That is giving us three chances right there for the market to reverse, and we do have a level of supply near a session high. That is a higher probability setup for me as well. So we have the level of supply for it to possibly reject off of and go to the downside, and we have that session high for it to do that same exact thing. If the market does not want to go even higher, we're going to get a rejection off that session high or that level of supply, and we're going to continue to go lower and hopefully go to our take profits. That is a good setup right there. Now, when it comes to marking all your levels of supply and demand, you're going to want to do this on every time frame if possible. So the time frames I look at are all up here. You can see we have the M1, M5, 15, H1, H4, daily, and weekly. Now, if you go all the way to my templates as well, you can see I have all those on a template as well, so I can just easily mark it out. And remember, the more time frames you have in Confluence, the better, especially if they're a mixture of some higher time frames and lower time frames. So I'm just going to give a few random examples in the market that I see of some levels of supply and demand. You can see right here we have a level of demand on the M15 time frame. You can see this previous contrary candle to that push up. So what we're going to do is we're going to go ahead and mark the tip of that candle, M15. Now you see how I marked this out on the M15? You're going to want to do that on the other time frames as well. You're going to want to go to your M5, M1, H1, all that, and you're going to want to mark the levels of supply and demand near that area as well on those previous contrary candles on that time frame. But for the purpose of this video, I'm just going to be marking this on the M15 and showing you how well this got respected off this level. So you can see right here, we had our M15, we came up. Now, if we were looking to buy from this level, you can see we tapped right into this level and then got that move to the upside, continued to go up, and it gave a crazy trade right there off that M15. You can see you would have barely taken any drawdown whatsoever, so that was a very clean M15 right there. And remember, you might even have some more time frames within that M15 as well. We might have an M5 and H1 right there, which gives higher probability for the market to go up and go our way. So here's a good example on the M15 time frame. You can see we have this previous contrary candle to that push down. So what we would go ahead and do is go ahead and mark it out and put it as M15. And for an example too, I'm going to go ahead and even mark out the session high that we have right here as well. So you can see we have an M15 and we have a session high right there. Let's just go ahead and jump to a different time frame, and boom, you can see we have an H1 right here as well. Let's go ahead and mark that H1 out. And going back to the M15 time frame, just to get a cleaner look at this, notice what we did right here. So we did tap into that H1, M15, and even tapped into that session high, and that is what gave us confirmation that we did not want to go higher since we got a pullback from that session high. And these levels were close enough to that session high where we could have got a rejection, and that's exactly what the market did. You can see we tapped into these levels and we actually got a very clean rejection, and look how far we would have went. This would have definitely gave you way more than a 1 to 4. This was a very, very clean trade, and that is a prime example right there. So that was kind of just a breakdown and a few examples of the strategy that I use that has helped me secure multiple funded accounts, multiple payouts. If you want to get a more in-depth look into my strategy, or you have some questions for me, you can join my Discord. The link is going to be in the bio. That's where I trade live. I do breakdowns, so it might be a little easier for you guys in there. Go ahead and just click the link in my bio. If you have any questions and you want to reach out to me on Instagram, you can follow me at OAlexZ. Link is also going to be in the description below. And this is just a very simple strategy. I tend to see a lot of beginner traders overcomplicate the market. They overcomplicate their strategy, and it tends to them failing a lot. There's no reason to have a crazy amount of indicators, a crazy amount of things you're looking at. Like I said, I look for session highs and lows, and I just use supply and demand. That is it. That is what's gotten me funded. It's what got me payouts. I've even used it on my own personal live account. It's something so simple that a lot of traders do tend to overlook. But yeah, I just wanted to make this video kind of just going over the strategy that has helped me secure multiple funded accounts. If you guys like the video, make sure you leave a like, comment, and subscribe, and I'll see you guys in the next video.